You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. Time to break down everything, lighting it up to the light side and the dark side in the world of futures options. Yes, it is time for TWIFO. My name, of course, Mark Longo from the optionsinsider.com, as well as from the network upon which so many of you are binging these days. Thanks to all of you who are joining us out here virtually in all this frigid weather going on. Hope you're staying safe, staying warm wherever you're hanging your hat across the U.S. or maybe around the globe out there as well. I know we have a lot of international listeners who enjoy a good bit of TWIFO as well. Of course, if you want to go above and beyond, not just with this show, but for everything else we do on the network, including lots of cool exclusive content like Options Oddities coming up after Vol Views every Friday. Great pro Q&A. We just did an extensive pro Q&A yesterday about all things zero-day options. So if you're intrigued by short-term options, and who isn't? And we got a fun little bonus for you. I did a fun panel at an industry conference last week with some fun guests that you may or may not know from their appearances on the network over the years. We did a great panel. You had to be in the room to hear it. Unless you're on the pro side, then maybe I won't say who, but someone may have snuck a recorder in there for you folks on the pro side to hear that panel as well. So save you the ticket to the conference, which was not cheap. Save you the flight to Chicago when it was sub-zero here. Just head on over to theoptionsinsider.com/pro. You can get access to that panel. You get all the exclusives. I just checked. There's 300 episodes waiting for you on that exclusive feed the second you hit that button. So there is a wealth of content there for you to enjoy, as well as live streams, giveaways, everything else we do over there on the pro. It's a fun party. Welcome to all the new folks who've been joining us here late at the end of last year and, of course, in the first few weeks of this new year. We love you all out there as we keep on rolling and explore the movers and shakers.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, listeners, welcome to the Movers and Shakers Report. Of course, it is that time of year, winter weather striking down our guest this week, so he can't make it at his appointed time. That happens sometime this time of year. We'll work to get them back on the show down the road, but that means I am flying solo out here this week, which is always fun for me on the old TWIFO program, because that means I don't have to listen to what anybody else wants to talk about. It's all my choice, my decision here, where we go on the show. And I think this week, looking at the graph, it is pretty heavily light side, as you might imagine. I'm going to say it's about a 65-35, maybe 70-30 green over red out there, which means, I'm going to surprise some people. I'm going to start to the light side this week. Number 5 to the light side. We're going off to the ags first, listeners. It is Chicago wheat, aka SRW wheat, up 4.27%. And a pretty banger week from a volume perspective. 106,000 contracts on the tape out there this week. So we could certainly hang our hat out there in a little bit of Chicago wheat, maybe talk some ags this week. Number 4, from there we go into the S&P sectors, in particular the communications sector, the S&P 500, having a banger week, up 4.36%. Again, no options available there, light futures volume, so not going to be able to sink our teeth into those, but those sectors starting to light it up more and more. Number 3, keeping it in the S&P sectors, go figure, is the tech sector. All you have to do, listeners, is whisper those magic 2 letters, AI, and bam, 4.41% to the upside in the S&P tech sector this week. Same deal, no options, light futures volume, so not really a candidate for our show yet, but still lighting it up to the upside this week. Number 2, back to the ags we go. KC wheat up 4.96%. And 7,500 contracts on the tape before you get too excited saying, hey, maybe you should start in KC wheat. If we're going to do wheat, Chicago wheat over 100,000 contracts, KC wheat about 7,500. You can see why KC wheat doesn't really make it on the show too often. If you're a diehard KC wheat fan, let us know right in. Maybe we'll see what we can do for you on this whopping 7,500 contracts. But unfortunately, probably not going to make it on the show today. You get your wheat fix in Chicago wheat. That's where you're all trading anyway. And then the number 1 light side mover this week, listeners, keeping it in the ags. It's an ags heavy week, but we're going out to the livestock this time. Lean hogs up 5.1%, so a pretty banger week for them. Also a decent volume week, 85,000 contracts. So starting to catch up to Chicago wheat are the lean hogs. Gone are the days when the livestock were kind of these just trade by appointment afterthought type of markets, where you went there, they traded for a few hours, nobody really cared about them. Unless you knew who was trading what out there, you had no chance of making money. These things are starting to trade much more actively. 85,000 contracts. I still wouldn't recommend it as a starter futures options product for you out there, but if you're a little bit more savvy, a little bit more sophisticated, at the very least, the liquidity is growing out there, so you don't suffer from the slippage that you used to have out there in the past when it was more of a trade by appointment type of underlying. So interesting stuff. Lean hogs taking it this week, and with a pretty robust volume week, we might be able to head out there. But before we go there, let's go to the dark side, listeners. Once again, keeping it in the S&P sectors, the consumer discretionary sector, taking it on the chin this week, off 1.75% for the number 5 spot. Number 4, from the equity sectors, we go out to the metals. This time to the other P name that we talk about once or twice here on the show, which is platinum, off 1.84%. Unfortunately, when we talk about it, this and palladium, it's usually only here in the movers and shakers. They tend to move. They just don't bring the volume numbers to make them worth talking about, unless you're really excited about analyzing 812 contracts in platinum. That's what is put up this week. So probably not going to head out to the metals this week, listeners. Number 3, from the metals, we go to Bitcoin, to the crypto. Is it digital gold? I think we've kind of settled that argument, but some folks still hold out that hope. Bitcoin off 1.87%. Man, the post ETF approval period has been a rough one for the hodlers out there. I've said it before, I will say it again. This has been one of the more clear-cut examples of buy the rumor and sell the fact that I've seen in quite some time. Folks were buying not just Bitcoin, but ETH and Solana and everything in the months leading up to this approval. And now that we have it, right back down the other side. Bitcoin off nearly 2% this week. It was number 1 to the dark side last week. That's where we saw the lion's share of the really aggressive sell-off. It was off 9.75%, so off well over 10% just in the last couple of weeks out there in Bitcoin. I know it did dip, I should say, below 40K yesterday, so that puts it down over 7,000 handles from where it was when the ETF was approved. So intriguing stuff out there. Unfortunately, listeners, for all of you out there who are saying, yeah, crypto, let's do it. I'm with you. I would love to do it. But we dug in right before showtime. The big Bitcoin options only put up about 700 contracts. And that's a 5x multiplier. So you're talking 3,500 roughly, but still not a lot to sink our teeth into there. If you throw in the micros, still under 1,000, 873 micros this week. So unfortunately, not a lot of volume for us to sink our teeth into out there. We would love to talk Bitcoin. The underlying is moving. The volatility is there. But if you trade in options, listeners, you need two things at the end of the day. You need volume and you need volatility. You got one side of the equation with Bitcoin. You don't have the other yet. So we're still waiting for that. Now we go back to the ags for number 2. This time, listeners, to soybean meal, off 2.46%. And, a decent day for soybean meal. We could certainly investigate out there. 48,000 contracts on the tape, listeners. And then our number 1 dark side mover, and just a banger across the board here, listeners. You know it. You love it. Maybe you hate it. It's Nat Gas. Either way, it is inescapable. It is undeniable. Off 9.37% this week. And also, not even a full week yet. We used to talk about Nat Gas, 400, decent week, 450, maybe 500,000 contracts, 500,000. Man, that was crazy town paper. You get to 600,000, that's just insane paper. Over 1 million contracts already, 1.03 million contracts. So Nat Gas has turned some corner from a volume, from a use case, whatever the catalyst is that is driving this flow. Nat Gas has hit another gear out there. So Nat Gas is undeniable, and we have to start our tour there first.
It's time to tap into the deep options well of black gold, Texas tea, Nat Gas, and more. It's time to talk energy.
Nat Gas is doing something special when it's starting to get into the volume range where we're talking about within at least visible distance, maybe not spitting distance yet, but visible distance of things like the E-mini S&P 500. Things are going. The game is afoot out there in Nat Gas. So you know where to go, listeners, as always, to find all these reports we're going to talk about over there on the show. CMEgroup.com/TWIFO, TWIFO, TWIO should also work. That should also get you to our reports. Once there, you're going to see an asset class drop down. You're going to go into that. You're going to go down 3 slots to energy, then over 3 more in the product family to Nat Gas, and then bam, we are off to the races. Whenever you pull it up, that's when you're going to see the report dated from. So if you pull it up on a Sunday, it's going to go back from there. So if you want to line it up with our show a little more, you can go into the time frame drop down. And you can go to, let's say, last week or 2 weeks, whatever your time frame you want to investigate is there. Or maybe even write in a custom time frame. And then you could line it up more with our reports, which of course go back from our last show, last Thursday, until now. These reports technically start from a Monday, so they show you the Monday volume all the way through to today. When we're talking about our movers and shakers, a little bit different frame of reference. We go back to the end of our show on Thursdays. I know it's a little bit confusing, but stay with us, listeners. And what's also confusing is the price action out here in Nat Gas this week. That's also what's throwing a wrench in some of these works, because we have, like I said, 1.03 million contracts on the tape already. And Nat Gas is not only looking like the E-mini S&P 500 from a volume perspective, but it's also starting to look like it from a trading perspective, because 41% of that is going up in the Feb contract that expires in 1 day. What are we doing? Are we talking 0-day Nat Gas now? Listen, is that what we're doing? Wow. This is crazy town out here in this product. It also shows you a bit of a dichotomy between what we're seeing out there. Also shows you a bit of the seasonality at work out here in Nat Gas right now, because that front future with 1 day to go is trading a little bit shy of $2.60 right now. Actually puts it up slightly on the week. But you go out to the March future, which has 32 days to go, and that one's at about $2.19. That one's off about 2.5% on the week. So again, kind of a mixed message at the end of the day. Also probably wreaking havoc with some of those numbers we're talking about here, off 9.37% for the week. When that front future's going haywire like that, tends to gum up the works, but there's no gumming up the volume out here. There's a lot of paper. So we're going to have to talk the contract going away in 1 day. As reticent as I am to do that, listeners, the vol in that front contract, such as it is with 1 day to go, 138. That puts it up 62 points on the week. Yeah, that's not really a meaningful number. Let's go out a month and let's see what the vol is out there. That makes more sense. 61.5, up about 3 points. So I can wrap my head around that. 138, not so much, but it sounds fun to say, doesn't it, listeners? In terms of skew on the puts going away tomorrow, they were 7.2% cheap last week, 7% cheap this week. This is what we were talking about with Carly last week, too. The skew was showing us some weird biases, all to the upside. The calls were 12.3% bid last week, 13.8% bid right now with 1 day to go. Of course, you fast forward a month to, again, saner, cooler, calmer heads, and the puts are kind of flat to the at the money. At least they were last week. They were 1.2% cheap last week. This week, catching a slight bid, 1.5% bid. Still close to flat out there. Again, when you're looking at a 61 at the money vol, 1.5%, not a huge premium. The calls last week, 4% bid. This week coming in as well, about 1.8% bid. So the puts and calls are kind of have an equivalent level of bid, which is close to flat, about a little over 1.5 points in either direction. So there's no real bias in any direction in the March skew, which is kind of fascinating. Maybe we're settling out around this 219, 220 level, looking to find the next catalyst that's going to drive Nat Gas in one direction or the other. What are you feeling in Nat Gas right now, Lisa? Are you feeling that it's going to threaten the two handle? You're looking at some puts to the downside? Are you thinking, maybe we got some upside in store for us before this winter is up? 2.5, maybe you're looking 2 3/4, maybe 3. Are you that optimistic? I think we were talking about the 4s on the show last week with Carly. Spoiler alert, those have not worked out. But, crazier things have happened in the world of Nat Gas. In terms of action, though, like we said, 41.7% of that over 1 million contracts is going up in the contract that expires in 1 day. So we're going to have to head out there, listeners. It is unavoidable. And the big dog this week, the most active contract in an extremely active Nat Gas complex, the 3 calls expiring in 1 day. Again, that front future is at a 259. So if you're thinking the 219 level, just bear that in mind. We're talking about a different future here. So that one's much higher. So the 3 calls make a little more sense. I won't say they make sense. They make a little more sense than if the future was at 219 and you're loading up on the 3 calls. Either way, though, these 3 calls have been lighting it up. The big day yesterday and today, really, those are the 2 big days. Almost 23,000 going up yesterday. It's like folks were bailing on them yesterday, which makes some sense. The 3 calls, we're not threatening those. Get the heck out of Dodge. Today, 20,000, I guess, getting what premium they can left for these things. Looks like, we don't know, but the OI is 28,000, so a good chance a good chunk of those are bailing today as well. Even though they were opening earlier in the week, about 8,000 going up on Monday, mostly opening, and 6,000 going up on Tuesday. So folks were opening. Again, they could have been overriding the 3 strike. Certainly in hindsight, that makes the most sense. But intriguing flow out here, listeners. And if that's a little bit too optimistic, a little bit too out of the money for you, allow me to present the 2 3/4 calls also going out tomorrow. Also doing a very respectable 52,000 contracts. Again, that's more than some complexes we're talking about here. Soybean oil, only 48,000 contracts here. Lean hogs doing 85,000. So if you add these first 2 calls together, that's more than that already. That's over 100,000, 108,000 in the 3 and 2 3/4 calls expiring tomorrow in Nat Gas versus 85,000 for the entire lean hogs complex. I mean, we won't even mention crypto. So yeah, this is a lot of paper. Listen, the Chicago wheat complex, 106,000 contracts. That's roughly equivalent to these 2 call options we're talking about in Nat Gas that are expiring tomorrow. So kind of puts it in a different frame of reference when you look at it from that perspective. And again, the banger days were, well, we had yesterday and today were active, but actually the banger day was Monday. So kind of a different approach here on the 2 3/4 calls. 18,000 going up on Monday, mostly opening. So folks piling into those 2 3/4 on Monday, that could make some sense. Again, we're at almost a 260 right now. So we can get a little bit of a mad dash towards the end of the week. Certainly on Monday, it might have made a little bit more sense. You had a whole week to go. Maybe you thought the 2 3/4 level was reachable, or maybe you were blasting the hell out of them. You didn't think it had a chance. Either way, a lot of opening paper there on Monday. Tuesday, 8,500. Wednesday, again, the day when everyone seemed like they were bailing on the upside in Nat Gas. 14,000 going up. Looks like most folks getting the heck out of Dodge. About 11,000 today, again, against 23,000 open interest. So we don't know for sure, but it seems like folks probably taking some off today as well. But again, We could hit 275 tomorrow with a decent little move out there. Weirder stuff has happened out here, listeners. And then from there, we have to jump out to the March contract. Thankfully, that has 30 days to go. Let's sink our teeth in out there, listeners. And the two puts going up 33, almost 34,000 times this week for the number 3 overall spot. Actually, I take that back. Looks like the two puts going up 39,000 times. Wow. That's a lot of paper for the two puts. Again, that goes back to the conversation we were just having. What do you think is more likely? Are we threatening more upside? Or are we threatening the two strike? If you're thinking the two strike, then those two puts going out in March, you might want to have those in your arsenal. Or if you don't think it's going to happen, maybe you want to blast away at these. Either way, 15,000 of them trading today against an OI of 36,000. So some folks may be piling in there today. Maybe taking them off. Yesterday, they were opening for size, 12,200 going up yesterday, mostly opening. So maybe if they're opening yesterday, they're opening again today. But they were closing earlier in the week, so a lot of back and forth paper here this week. 6,000 on Tuesday, 5,800 on Monday. Again, closing both of those days. So are you closing your two puts earlier in the week and then opening for size later in the week? I mean, we did sell off a little bit towards the latter portion of the week, so that could make some sense. But yeah, just intriguing flow here across the board, listeners. And you know what? I was joking earlier about those ridiculous 4 calls that we were talking about last week with Carly here in Nat Gas. But those were expiring in roughly 8 days, which puts them going out in about a day. Let's just look really quickly back to the 1 day. Let's see if there's any action. You know, I don't even see the 4 calls here. So I'm guessing last week's paper was, folks, hopefully, if they were sane, getting the heck out of Dodge with whatever they could get remaining for those 4 calls, because the highest strike I see now going up this week for any decent size are the 3/2. They traded about 14,400 times this week. So yeah, no action in the 4 calls, as exciting as that would be. I would say the 2 puts, outside of this stuff going away in a day, it does seem like the 2 puts and the 2 strike in general is going to be our strike of the week here. 2 puts going up 33,000 times in March, 2 puts going up 13,000 times in April, 15,000 times in May. Then we get out to the 1/2 puts in June. That's interesting, going up about 7,800 times. And then back to the 2s, going up about 7,000 times in July and about 6,000 times in August. So 2 puts, very active out here this week. Again, maybe given some rub to that conversation about testing some more downside before we get up to the upside. Let's look at the skew really quickly, too, as we go farther out, see what we're seeing out there. And it looks like once you get past the March contract, which, again, as I said, was kind of flat, once you start getting out into April and beyond, the puts start getting a bid and the calls start getting a pretty decent offer. It starts to look like a decent equity skew if you go a little bit farther out. You go to June and beyond, June and July, you start looking at 10% bid for the puts and about a 7.5% discount for the calls. So again, that looks like a decent little equity index skew you might see out there where the puts are bid, the calls are offered. That also speaks obviously to the seasonality of Nat Gas during the summer months. Folks don't really want to own Nat Gas during that period, so start to see some bids over there. But then it's interesting. Once you start getting, again, the seasonality for this product is just off the charts, because once you start getting into that seasonal period, you know, you go from October, listeners, where the puts are 10.1% bid right now in Nat Gas. You jump 1 month. You just go to November, and that bid vanishes. All of a sudden, that goes to effectively flat, about 1.2% bid. And now the calls go from about 8% cheap to about 3% bid. So that's, if you're wondering where the inflection point is on the term structure, that's where the seasonality starts to kick in. November. It makes some sense. That's where you start seeing a bid materialize here for Nat Gas. And then you get to December, and all of a sudden you're talking 3% bid for the calls, and then the bid starts kicking in from there. You get to January next year, over 8% bid. So it just swings markedly. I mean, a lot of products exhibit seasonality. Nat Gas is perhaps the starkest example of it out there. So Nat Gas just bring in the heat, pun intended, out here these days, listeners. Even if you're tired of hearing about Nat Gas on the show or it's not interesting you, it is unavoidable. It is taking up all the oxygen in the room right now. Headlines, interest, certainly from a trading volume perspective and also from an underlying movement perspective and a vol perspective. It's delivering on all fronts. So again, if you're kind of tired of Nat Gas, I'm sure you wait a few months. Once we get out of the winter months, we might start seeing the interest and the volume ebb a bit in Nat Gas. But right now, doesn't seem like there's much that can stop it, listeners. Much that can kick it out of our top slot in our movers and shakers pretty much every week out here. So once we get beyond Nat Gas, despite all the action going on in the Red Sea and with shipping, we're not seeing any other energy products really making it into our movers and shakers this week. So off to the ags we go.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, to the green stuff we go, to the world of ags. Go into that drop down over there at cmegroup.com/TWIFO. And again, if I haven't said it in a while, if you're interested in these reports, you should be checking out the premium stuff over there at Bantix. Bantix.com, Bantix.com is the place to go to kick the tires and light the fires. There's a free trial, so don't worry. You're not on the hook for anything right off the bat. But if you like these reports and you want to go above and beyond, there are literally dozens upon dozens, if not hundreds of other reports we don't have a chance to sink into. All the pace of the roll, the block trades, everything going on out there. You could scan for all of this stuff, futures analysis, you name it. We don't even scratch the surface of that. There's no time on this show. We just focus exclusively on the This Week in Futures Options report, which is just one of many reports they have available there. So if you like what's going on this show, you want to go deeper into some of this analysis, Bantix.com, Quick Strike, really kind of the only game in town for this stuff. If you're intrigued at all by futures options, unlike the equity side where there's many different players going at the analytics front in many different ways, on the futures options front, it's really Quick Strike and Bantix and nothing else. So if you're not checking out this stuff, I don't know really where you're getting any decent analytics on the futures options front, because this is kind of the only game in town. Bantix.com, the place to go to kick the tires and light the fires. I do think you're going to like what you find. Tell Nick and company we sent you. He'll love to hear it. It'll make him cheerful, which is a hard thing to do. All right, to the world of ags we go, listeners. And, we said Chicago wheat's taking it right now, so we're going to head out there. Right around 108,000 contracts on the tape right now, so a couple thousand more going up since the start of the show out there in Chicago wheat. Again, to put it in context, that's as much as the 3 2 3/4 calls expiring tomorrow in Nat Gas alone. So a hot week, but it's no Nat Gas. There are a few things that are. Right now, you might be saying to yourself, where is Chicago wheat? Oh, fine host, you. And the answer is 612. Up about 18 3/4, or about a little over 3, about 3.16%. Again, that's just since Monday. You go back to the end of our show on Thursday, up over 4.25%. So a decent week out here for Chicago wheat. Talking Nat Gas, talking wheat. Are we back in the early days of the Ukraine invasion, listeners? Kind of stuff we were talking about back then. Either way, 108,000 contracts on the tape, 56% of that going up again. Joke about the ags not being very near-dated, zero-day friendly. 56% of that going up in the contract that is expiring in one day. So near-dated flow palooza out here this week in Chicago wheat, listeners. If we go beyond that, we go out to the March contract. That has about 31% as well. So we'll probably do a mix of both, because skew and vol in 1 day to go contracts, not exactly meaningful numbers. Again, the vol in the 1 day to go contract, about a 27, up 1.5. So not quite as outlandish as what we saw in the Nat Gas 1 day to go contract. The puts 2% cheap, and the calls about 5% bid. So a slight bid to the upside in the 1 day to go contracts. We go a little bit farther out. We go to March. The vol there, a little bit shy of 28, about 27.86, up about 1.25 points. So again, respectable, given the fact that we have a lot of other products trading in the teens or low 20s from a vol perspective. So threatening a 30, nothing to sneeze at out here from a vol perspective. It's no Nat Gas, it's no Bitcoin, but then again, it's Chicago wheat. You don't expect those vol levels. In terms of skew, last week the puts 4.2% cheap. This week 5.6% cheap. So puts getting cheaper. The calls 6.2% bid last week. This week 7.4% bid. So the calls getting a little bit richer. The puts getting a little bit cheaper. So again, the ags tend to line up this way a lot. Bid to the upside. It makes it, for those of you out there who like a good collar, these kinds of setups tend to be favorable for that. It's not extreme. I wouldn't call a 5% discount and a 7% bid. Oh, you got to run out and do collars right now in Chicago wheat, but it's certainly more favorable than what we were just talking about out there in Nat Gas, where you start talking about, crazy bids to the puts and discounts to the calls. That's not what you want when you're setting up collars out there. In terms of action, we got a little bit of a fight for the number one spot. The 590 puts going away tomorrow, listeners, doing about 5,500 contracts this week. So they are taking the number one spot, but just by a few hundred contracts. In terms of action, it seems like the lion's share of those was Wednesday, 2,700 going up Wednesday, mostly closing there, 1,300 each Monday and Tuesday. So somebody piled in opening Monday and Tuesday, about 2,700 contracts. Then it seems like they took them all off on Wednesday. So they had a bit of a shot going, and they probably closed it on Wednesday. Not much going on today, a couple hundred today. There's still about 1,800 contracts open on the strike, so they didn't take everything off, but looks like whatever they added earlier in the week, they took it off on Wednesday and got the heck out of Dodge. So a little bit of a near-dated play. And then right behind it, listen, number two. So actually there was a close fight for two. We have the 610 calls also going away in a day, doing 5,300 contracts. The big day for those yesterday, 1,900, slightly closing. 1,800 going up today. Obviously opening because there's only 1,300 open on the strike coming into today. So some folks are piling in to the 610s with 1 day to go. We're at a 612, so makes some sense. Those are in the money. 1,100 on Tuesday opening there, and about 400 on Monday, slightly closing there on these 610s. And then right behind that, we have the 630s in March going up this week about 5,200 times. So kind of coming in right at the number 3 spot. A tight fight for the top 3 spots out there. Only a couple hundred contracts settling, or I should say separating each. Unlike everything else, though, the 630s traded almost everything on Wednesday. 4,300 on Wednesday. A few hundred each Monday and Tuesday. Nothing to speak of today. So opening all week long. Also worth noting, all that OI is still open. There's 6,500 of the March 630s still open on that strike. So folks were piling in earlier this week, and they're sitting on it, which makes sense. Those contracts have a ways to go. They're not going to bail that quickly. And worth noting, that contract, it has about almost 30 days to go, about 29 days to go. So they got some time. That future also had about a 612 out there. So 630s could be seen as a little bit optimistic, but that's the strike they're piling into. If that's not far enough out or out of the money for you, listeners, allow me to present the May pars, the May 700s, going up about 1,300 times this week, also in Chicago wheat, obviously. So intriguing stuff out there. May, obviously, a little bit longer run. Trading pretty actively, but the big day was Wednesday. 1,000 going up on Wednesday, and then a couple hundred each the rest of the week. So the OI also a little over 1,000. So clearly they're opening on the 700s. Doesn't seem like, there's other paper going up on Tuesday. Tuesday was a pretty active day, it seems like, in this May contract, but it doesn't seem like anything lines up 1-to-1 with these. Like there would be any, or even on a decent ratio, 1/2, 1/3. Just a bunch of weird paper, 630s, 650s, all kinds of stuff, but nothing that would look like, oh, that's clearly a fly or clearly a ratio spread, anything like that. That looks like they were closing on the 780s, 750s, 6/2. So maybe they're rolling all of that to the 700s, but that would be weird as well. So let's assume the 700s are standing on their own for now, 1,000 of those in May. So you think by May expiration, 700 in Chicago wheat, maybe you wheat heads out there think that's a good do, as they say. Hit us up, let us know. And speaking of letting us know, listeners, we've had some fun in listener polls and some great feedback out there. So I think we'll get to some of that next.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, listeners, welcome to the Futures Options Feedback. Obviously, a little bit shorter show this week. Just me flying solo in the hot seat. And there's not, quite frankly, outside of Nat Gas and a couple of ags, not a ton lighting it up out there to sink our teeth into this week. But you know what? There's always stuff to sink our teeth into with you folks and your feedback, and of course, our questions of the week and your insights in our polls, which if you're not playing along with, what are you doing? Give us a follow at Options over there on Twitter. I know many of you do already. That's where you're going to see all of our questions of the week, as well as all of our fun back and forth. So all the other shows we do throughout the week and our guests and our co-hosts and all sorts of fun going on over there at Options on Twitter if you're not following already. It's a good one, even if I am a little bit biased, listeners. And last week we asked you kind of to kick off our trading year, right? There's a lot of different things we like to ask at the beginning of the year. We asked broad sentiment, a bunch of other things. We also ask you, how do you think you're going to be trading this year? Every year seems to have a theme to it. Obviously, 2020, the crazy pandemic and the explosion of volume. 2021 was, of course, the meme stock palooza and short squeezes and upside calls for days. And then, of course, 2022, we saw a lot of downside, a lot of red on the screen. Last year, kind of a weird topsy-turvy year. It was all AI as vol got annihilated and markets rallied. This year, we ask you again, looking ahead to a new trading year, what options strategies do you anticipate using the most this year? Again, only have 4 slots to fill, so we try to cram as much in as possible. We gave you long calls, long puts, and verticals, covered calls, short puts, and verticals, straddles, strangles, and butterflies, and of course, the old standbys of calendars and diagonals. Maybe some options 201 or even 301 there for you. And you folks seem like you want to buy some premium this year. Long calls, long puts, and verticals taking it with 39.5% of the vote. Right behind it, we have folks who want to blast away at some premium. So that light side, dark side dance playing out once again. 31.6% say you want to sell covered calls, short puts, or verticals. And then 21.1% coming in for the straddles, strangles, and butterflies. We didn't specify buying or selling. Again, it's only 4 slots. We're limited, listeners. So those can go both light side or dark side. By the way, listen to our option block show where our buddy the Flow Master was talking about a mega fly that went up in the S&P recently, selling hundreds of thousands of contracts on a fly for a net credit of 4 cents. We always joke about people picking up nickels in front of the steamroller in the E-mini S&P 500, but they do it in other products too, including ridiculous mega flies for a whopping 4 cents, less than a nickel, out there in the SPY option. So if you're intrigued by all things premium harvesting for size in the S&P 500, make sure you're checking out the option block. You can get it wherever the rest of our network content is available. And then, of course, the calendars and diagonals are bringing up the rear, only 7.9%. Fast forward to this week's question. This one a little bit deeper in the weeds, but we like to pick your brains on all sorts of fun topics, listeners. And again, we have a lot of listeners on our network who love to sling some volatility, whether they know it or not. You're out there trading options, you're trading vol at the end of the day. So we thought we'd ask you folks, what is your preferred way to trade broad market vol? So broad index, broad S&P type of volatility. That's what we're focused on here. We're not focusing on specific, Nat Gas vol or crypto vol, anything like that. We're just talking broad equity vol. How do you like to play that at the end of the day? Do you like to go, for example, in your plain old S&P 500 options, which again, if you're trading those, you're trading index vol, whether you know it or not. Could be in the E-mini options, could be SPX, SPY, however you carve it up. Is that your preferred choice, listeners? Or do you like to go maybe a more direct route? You go over to the vol complex itself, to the VIX complex, and maybe trade the options or the futures there. Or do you go into some of the vol ETPs that we talk about a lot here on the show? So that could be, your VXXs and others. Those that attempt to try to replicate a vol position using the futures and do a middling job at it at the end of the day. Depends on your outlook, what you're looking at them for. Or you like to get a little bit funky. You go to the inverse or indeed the levered vol products. And these could be, your UVXYs, your UVIXs, all that kind of fun stuff. SVIX for the inverse. All kinds of ways you can go out there. And so, listeners, unfortunately, I have to admit there has been some skullduggery in our poll. Because coming into the start of the shows today, S&P options was taking it with well over 40% of the poll. But we have seen, and since a resurgence, there has been a groundswell of support, perhaps some folks trying to gum up the works by stuffing the ballot box for the inverse or levered ETPs, in particular UVXY. I know there's a lot of folks out there, including one person who shall remain nameless, who's the captain of the UVXY Defense Force. And he's urging people to stuff up the ballot box. So we got some skullduggery right now with inverse and levered ETPs taking it with 41.3% of you. Do you folks prefer SVIX or UVXY or UVIX to S&P vol? I don't know. Straight up S&P options? I don't know. Right now in our poll it is 36.5% for number 2, saying your plain old E-mini options or your SPX or your SPY, however you want to trade the S&P vol. That's your choice for number 2. 15.9% for number 3, coming in for what is traditionally the direct route, the VIX options and futures. You want to trade straight S&P vol. You don't want to mess around with the delta on the S&P options or any of that stuff. You want to go straight to the vol. Then the VIX options and futures coming in a distant third, 15.9%. And then no love for the plain vanilla vol ETPs like VXX, only 6.3%. If all of that is just confusing to you, don't know what the hell any of those products are, you should be checking out our Volatility Views program. We get into all that fun stuff and a lot more detail. If you're outraged that, the E-mini or the SPX or the SPY options aren't taking it, or maybe one other name isn't doing as well as you thought, get over there, fight back against these UVXY folks who are trying to stuff our ballot box and maybe put some other votes in there. Even things out. Otherwise, in about a day and a half when this poll expires, the UVXY folks are going to take it. Don't let the UVXY Defense Force win, listeners. Get out there and make your voice heard. At Options on Twitter is the place to go. And that music means we have to get out of here for this week, listeners. A Just the Facts, ma'am, edition of TWIFO. Back again tomorrow, like we said, talking all this vol stuff on Volatility Views at noon Central. After that, we'll be back exclusively for our pro members with Options Oddities. Also, a little birdie telling me that panel should be making it onto the pro sometime soon, and we'll be able to hear that as well. So a whole bunch of goodness coming up on the pro in short order. So if you want to get in there now before Options Oddities tomorrow. You can join us for that show. And of course, get access to the 300 plus other episodes that are waiting for you. The second you hit that button, theoptionsinsider.com/pro is the place to go to learn more. And then we're back again next Monday for the option block all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.